Hey guys, welcome back to my portfolio and my channel. So today I wanted to go over my full $23,000 portfolio on Robinhood and really just show you guys what stocks and ETFs I'm currently investing in. I'm really excited today because my account is finally at $23,000, which is really close to $25,000, which of course is my first milestone to the $100,000 challenge. I'm really trying to get to $100,000 in my Robinhood account. So right now, like I said, it's at $24,000 or just under $24,000 and really close to that $25,000. And then the next milestone after that is going to be $30,000.
30,000?
Not really, I just wanted to put that meme in there. But anyway, let's jump into the portfolio. So I'm going to pull it up and you'll notice that I rank my stocks and ETFs from going from the top from most important to least important. So I'm actually going to start from the bottom of the list and start with the ones that aren't as important. These aren't the ones that I manage or watch very closely. And so these are actually starting out with the dividend paying stocks. So this first one is IEP or Icon Enterprises, one share. This is a quarterly dividend paying stock. Haven't received a dividend from them yet because I just barely bought this a couple weeks ago. So just waiting to receive the first dividend from Icon Enterprises. This next one is O Realty or Realty Income, about $800 in this one. Pays about $2.23 every month, and hopefully we'll build that up to, $10, $20, $30 a month. But of course that takes a while and requires a good amount of capital to receive a good amount of income. The next one is SL Green. SLG is the ticker symbol on this one. Pays about $3.73 every month. This is a monthly dividend paying stock. Another one is JEPI. This is a pretty popular one. JEPI or JEPI, about $500 in this one and down about 4%, but still pays that monthly dividend every month. And I'm getting about $5 a month from JEPI. Next one is Gladstone Investment or GAIN. $100 here, 7 shares, pays about 6%. And pays out monthly. AGNC, so this one was supposed to be my baby. This one was supposed to be one that I just keep building every single month and, make $100 a month in passive income. But I kind of gave up on AGNC just because it dipped down about 30% and I didn't know how far it was going to dive. So I stopped buying into AGNC. It's back up a little bit and I'm getting about $10 a month from AGNC. This next one is actually one of my favorite dividend paying funds to invest in. It's actually an ETF. It's not a stock. SPHD, Invesco High Dividend Low Volatility ETF. So it pays out a dividend every single month. Not super high. It's only 4% per year, but of course paid out every month. And I'm only getting about $4 a month every single month, but I'm hoping to build it up to about $50 a month in passive income. So just one that I really like to have in my portfolio to receive that passive income. Next one is Prospect Capital or PSEC, getting $1.50 every month from this one. Stag Industrial, about 20 shares, just under $700 in this one, and getting about $3 a month in passive income from Stag. Dynex Capital, about $400 in here, getting $4 a month in dividends. Horizon Technology Finance, just under $200 in this one, getting $1.30 every single month. So this next one was just kind of an impulse buy. I don't know anything about the company. Just noticed that it pays a 21.5% dividend every single year, paid out every quarter. And like I said, just kind of threw money into this one, about $100, and probably going to sell this one and take it out of my portfolio. So this next one is a real estate company. They build single family homes in the US. It's NVR. This company's been around for years and it's actually been an amazing growth stock to own over the past 20 years. So I just added this one for extra growth and diversification in my portfolio. So only about $200. The stock's worth $4,400 right now. And again, just adding for diversification in my portfolio. Next one is IDEX, IDEX, about $300 in here, a 4% return so far, or $12. Next one is a technology company, Intuit. They own TurboTax, $83.54 into this one, less than a share here. So this next one is Adobe, and Adobe was one of the greatest tech stocks to invest in basically for this decade. It's always been one of the leaders in tech, just a huge billion-dollar company. Of course, we are familiar with the brand. Down about 33.5%, and I only have about half a share, so I'm still down 30% on Adobe. Haven't bought any more shares or fractions of shares or anything. Haven't put much money into Adobe for a while, but still have it in my portfolio. Next one is Fair Isaac or FICO, only about $827 in here, but my return is 16% and up about $113 here. Accenture is a tech company based in Ireland, just got a dividend of 97 cents, which is cool. One share here at about $316. ResMed is a medical company, down about 4% and just one share at $249. Sun Communities, this is another real estate company, down 9% with about $330 in here. Atlassian or Team is another tech company, This one's been extremely volatile over the past few months. I actually ended up selling out most of it. I think I had about 8 shares at one point, so down to just 1 share here and still down just under 11%. Next one is RSG, Republic Services. I mentioned this in one of my other videos. Just 1 share here. This is a garbage company that I believe is very strong and will of course be around for the next few decades. Next one is Union Pacific. This is a railroad company here in the United States, and just a little over 1 share here, up 11% or $26. This next one is a Canadian railway company. This is Canadian Pacific Railway. It's up about 18% since I bought it. I bought it about a year ago, just about a year ago. I bought into this company. Just 1 share here, but maybe we'll add a few more shares in the future. Danaher is another medical company, up 2.8%, just 1.5 shares here at around $282 as my average cost. So the next one is QLD. This is basically just the leveraged version of the QQQ ETF, leveraged 2 times. Let's see, I only have about 9 shares here, down 32%. Next one is PepsiCo, PEP, only about $51 into this one. Not too exciting here, but I'm still up about 3%, so made $1.40 on this one. Just a brand and a company that I really like. Of course, I enjoy the drinks really well. They just came out with a new drink called the Pepsi Nitro, so I would definitely recommend it. Go check it out, go drink it. It's amazing. The next one is O'Reilly Auto Parts. I think AutoZone is actually a better stock to invest in. It's done a little bit better than O'Reilly, but of course I like O'Reilly as a company a little bit better, and I've put in about $155 into O'Reilly. I'm a big car guy, I'm big into car companies, so O'Reilly Auto Parts is something to invest in. Next one is VTV Vanguard Value ETF. This is, of course, tracks value stocks and only about $138 in here, so 1 share. XLU, the Utilities Select Sector SPDR Fund. This is a, of course, fund that tracks utilities companies. 1 share here. Nothing too exciting on this one. Petrobras, a dividend-paying company actually based out of Brazil. And if you click right here, ADR, they charge you to own this just because it's not based in the US. So on Robinhood, they'll charge you typically 1 cent to 3 cents per share. So probably going to end up selling ADR, but I bought it because of the fat dividend that it pays. It's about 32.10% on Robinhood, paid out every quarter, which is of course why I bought it. But I'll probably end up selling it, like I said. Don't really have a need to hold on to a stock like this. Next one is VTI Vanguard Total Stock Market ETF. So this is probably one of the most broad ETFs you can buy into. Down about 11% on this one, but I'm going to actually keep dollar cost averaging this one for the next few months to years. Abbott Laboratories, I've had this for almost a year now, down 6.4%. This is a company that I believe in. This is a healthcare products company with a very strong brand, and it looks like I got a dividend of $2 that's coming up here on the 15th of August. So this next one is Zoetis or ZTS. This is basically a veterinary company that's been around since the early 1950s. About $700 here. Down about 3.5%. This next one is Arthur J. Gallagher, $300 here, up about 13% on this stock. And so this one is VOO Vanguard S&P 500 ETF. This is probably one of the most popular ETFs that a lot of the YouTubers and financial advisors talk about. It tracks the S&P 500 and slowly adds value over time. Adds a lot of value to your portfolio as well. I have about $1,400 in here, and I'm only down about 3% over time. Integris Health, about $800 in here, down about 3% as well. Did take a big plummet this year. At one point it was down about 35%, but now it's back up to just under $110, and my average cost is $113, so like I said, just down about 3%. Next one is Cintas or CTAS, up about 13% or $60, just around $600 in here. This is a cleaning company that provides cleaning services for shops, auto shops, things like that. Very solid company, very solid brand that I definitely believe in. Next one is Target. I've talked about Target before. Took a huge hit this year. I'm down about 30% and have $1,600 in here. At one point I had over $2,000 in Target, but took a huge dive and I wanted to diversify a little bit more. And so I put my money into other funds. Staying with the retail stores, Costco, one of my favorite companies, favorite stocks, and favorite brands to invest in, up about 7.5% or $84, and I have about $1,200 in this company. Like I said, they own the Kirkland brand, just a huge company that's been around for a while, and something that I definitely believe in. So Dollar General, I mentioned Dollar General before. I consider this a company that's very solid and will be around for a while as well. It's a store that people need to go to when they're looking for a little bit cheaper products, so I have about $100 in Dollar General. The next one is TMO or Thermo Fisher Scientific, $250 in this one, up about 11%. MasterCard, I actually ended up selling a good amount of MasterCard. I just didn't really want it in my portfolio anymore. I just wanted a little bit more diversification in my portfolio, so I did sell, I think, about 4 or 5 shares of MasterCard this year, but it looks like I'm getting a dividend of about $1 coming up here on the 9th of August. So basically flat on here, 2.5 shares and $800 in this one, and like I said, just flat up about $3. VOOG, this is of course very similar to VOO, but more growth focused when it comes to tracking the S&P 500. $1,700 in here and pretty much broke even, down just under 1% or $15. Next one is SPYG, another growth focused ETF, down about 7.5% with just under $1,000 in here. This next one, second to last one, is SCHG. This is another growth focused ETF. As you guys know, I am a big fan of ETFs. You can pretty much consider me part of the ETF gang. So I'm down about 3.5% on SCHG and have just under $800 in here, or 11.5 shares. And so this last one is XLK, the Technology Select ETF. The biggest holding in the portfolio at around $5,000, and I'm just about to break even here at negative 1.86% as my total return. So hopefully we can at least break even and start seeing gains on some of these funds. I also wanted to mention another thing about the buying power here. As you can see, it says $21,000 that I can essentially use as buying power if I really wanted to. So for those of you who don't know, I am using Robinhood Gold, which is a $5 a month fee to borrow the margin, to use the margin that Robinhood offers you. So this $21,000 here is basically there as a loan if I wanted to, if I could take out more if I desire. But the problem is I'm charged 5%, not to mention how much risk and volatility adds to the portfolio. So I am borrowing right now about $5,000 in that margin. So of course I'm paying 5% of that $5,000, and it's charged every month on top of the $5 fee to use the Robinhood Gold. And the reason why I'm doing it is because I like to add just a pinch more of risk and reward to my portfolio. So like I said, I'm borrowing that $5,000 on top of the 23 in here. So my total account value is about $28,000. And I'm really just kind of seeing how this plays out. I'm not planning on borrowing too much for very long. Once I do see significant gains, I'm going to actually sell out, because like I always say, try to keep my portfolio as safe and less volatile as I possibly can. But I also, like I said, do like to add just a little bit of risk to my portfolio. So it's really up to you to decide whether or not it's worth it to use margin. I would advise being extremely careful with borrowing money, because like I said, it can help you bring your account to zero pretty quickly. So the trick with margin is really just being as careful as you can with it. So that's it for my portfolio, guys. Feel free to judge me and to call out any mistakes or any stupid trades or investments that I make on my portfolio. And, just feel free to add any comments or insights to the comments below, and just, say what you want about my portfolio. I'm ready to take the heat, and I'm ready to take the judgments for my portfolio. So this is what I believe is something that will help grow over time. And like I mentioned before too, I am putting money into my account every month, somewhere around $500 to $1,000 into Robinhood.
I'm getting 1,000!
You guys are getting paid?
And that's just what I believe is how investing works. You have to add money into your account to help compound and to help grow over time to see a little bit bigger returns. That's it for the video, guys. I hope to catch you later. See ya.